Good day, everyone. Trust you're doing well today. Today, we're talking about NGX losing 2.29 trillion in just 2 days, in the stock market. Now, you probably must have seen this headline and, immediately thought, wow, something terrible must be happening in the stock market. Because that's exactly what many people felt when, they saw the news that the Nigeria stock, market lost 2.29 trillion in just 2 days. 2.29 trillion naira. Well, that number is so big that most people can't even comprehend it or even picture it, mentally picture it. But here's the interesting part. That is not actually what happened. In fact, the real story is much more interesting than the headline. And once you understand what's really going on, you would start looking at stock market news very differently. So let's break it down. Imagine there is a huge village with 100 houses. Now, each house is worth 10 million naira. That means the total value of all the houses in the village is 1 billion naira. Now imagine that next week people suddenly become, less excited about buying houses in that village. Nobody burnt any house, nobody stole anyone's house, nothing catastrophic happened. But buyers are just now willing to pay 9 million per house. So suddenly, what will now then happen is the total value of the village will drop from 1 billion naira to 900 million naira. Now, on paper, that village has lost 100 million naira in value, right? But then again, you would ask yourself, did anyone actually lose 100 million naira cash? The answer is no. So the value is simply what's changed. And that's exactly how stock market works, right? When people say the Nigeria Stock Exchange lost 2.29 trillion naira, they don't actually mean somebody carried away 2.29 trillion naira in cash. What actually happened is that investors started selling shares, then price dropped and the total market value of listed companies became lower. In other words, devalued. That is what the headline is really talking about. Now, here is where things get interesting because the big question isn't whether the market fell. The big question is why did investors suddenly start selling? And this is where every investor in the Nigeria stock market craves to know. Now imagine you bought a stock at 100 naira. Over time, it rises to 180 naira. You then realize that you are sitting on a nice profit. Then you start thinking maybe I should start selling before price start falling. At the same time, thousands of other investors are having the same exact thought as you. And that's where the game begins because now every investor wants to do one thing. They want to sell before everyone sells, not after, but before. Because if you are early, you lock in your profit. But if you're late, you watch your gains disappear. The funny thing is, nobody knows exactly when everybody else will sell. So people start, watching each other. And once a few investors begin to take profit, others start paying attention. Then more investors will now begin to sell. Then others will now start getting nervous. Why some will start even selling? So suddenly, what started as a few people taking profit becomes a market-wide decline. This is one reason stock market can fall even when there is no major economic disaster happening because markets are driven by both numbers and human emotions and emotions can spread very quickly. Now let's talk about something many people are missing. This decline didn't come out of nowhere, all right? So the Nigerian stock market has been on a very strong run. In fact, it had reached record high earlier this year. Many stocks had risen significantly. A lot of investors were sitting on huge gains, and when investors make big profit, they often do something very simple. They take money off the table. This is called profit taking. And despite how scary it sounds, profit taking is actually normal. Think about it. If you invested money and your investment went up 50%, 70%, or even more, would you really just sit there forever? Probably not, right? At some point, you want to secure some of those gains. Large investment firms think exactly the same. And that brings us to another important group of players, the big institutional players. Now we are talking about the pension fund guys, insurance company, asset management company. These people control billions of naira. Now, these investors don't keep all their money in one place forever. Sometimes they move money out of stock and into treasury bills. sometimes into bonds, sometimes into cash, sometimes into other opportunities. All right. So this process is called portfolio rebalancing. And when institutions, move large amounts of money, the market feels it. A single large institution, right, can move more money than thousands of retail investors combined. So when these big players start, adjusting their portfolios, prices can move very, very, very quickly. Now, here is something that separates professional investors from beginners. All right. So professionals don't ask, why is the market falling? Rather, they ask, who is selling and why? Because those two are completely different questions. If people are selling because a certain company is doing so badly, maybe bad news or whatever, or the company is even collapsing, then that's dangerous. But if people are selling simply because they want to lock in profit after a huge rally, that's completely different situation. And right now, the evidence seems to suggest that profit taking is playing a major role. Which leads us to another important question. Does this mean Nigeria economy is in trouble? Well, not necessarily. Okay. The stock market and the economy are not the same thing. However, they are connected, but they are not identical. The stock market is always trying to predict the future. Sometimes it rises before the economy improves. Sometimes it falls before the economy slows down. And sometimes it simply corrects itself, after, making a very, very huge, rally. So a market decline by itself doesn't actually mean there is crisis. Now let's talk about what could happen next. Now this is where things, really becomes very important for, investors. The first possibility is that there is simply a healthy correction going on. Investors are actually taking profit. At some point, selling pressure will slow down, right? So new buyer will come in, the market will stabilize, and eventually the uptrend continues again. This happens all the time in strong bull markets. However, the second possibility is that the market moves sideways. Instead of going sharply up or sharply down, prices bounce around for for weeks. Investors wait. They watch economic data, do fundamental analysis, they watch company earnings, they wait for new information. This is one of the most common outcomes after a strong rally. Then there is this third possibility, a deeper correction. This will happen if new problems appear. Maybe inflation rises, like sort of hyperinflation, then interest rate becomes less attractive for stocks. Or maybe foreign investors start pulling money out. Or maybe company earnings disappoint, major company earnings like the likes of, Aradel, MTN, Lafarge, those big companies. Now, those things could create additional selling pressure. But based on what we know right now, that does not appear to be the most likely outcome. And this brings us to the most important lesson in today's video. The real story isn't the 2.29 trillion naira. All right, that headline is just more of clickbaity. So the real story is understanding what the big money is doing, because markets are ultimately driven by incentives. Every investor is asking one simple question: where can I get the best return for my money? If stocks continue to offer attractive opportunities, buyer will come back. If investors find better opportunities elsewhere, money will move. That's the real game, not the panic, not the social media reaction. It's just the incentive. And if you're a long-term investor, this is one question that matters more than anything. You should ask yourself, has the business you invested in changed? Not as the stock price changed. Because those are completely, two different questions. A stock price can fall while the business remains strong. And that's often where opportunities are created. So yes, the Nigeria stock market lost 2.29 trillion naira in market value only. Then that's for over two trading sessions. But no, 2.29 trillion naira did not disappear from Nigeria. So what is actually happening right now is just investors taking profits, and nothing more or nothing less than that. However, the next few weeks will tell us whether buyers step back in, or whether selling pressure continues. And that's the real story investors should be watching out for. And again, on this channel, we don't just follow headlines. We break down what's really happening behind the headline. If you gain value from this video, please like and subscribe so you do not miss my next video. All right, have a nice day. Bye.